Hello, everybody. Hope you are having a great weekend. It's 4th of July, but I couldn't help but sit in front of my computer and look at what's going to happen or what has happened this year. So it has been a tough year, but we are officially halfway through it. After 6 months, we have taken a beating. Microsoft is down 22.82 year to date. Google is down 24.61. Amazon 34.28. We do have sectors that are up. The energy sector, as you can see here, is up with XOM leading the charge at 43%. The utility sector, which is also oil based, you have companies like Duke Energy, Dominion Energy. It's called utilities, but they're still energy sectors. That sector is a little bit up. And then the healthcare sector, you could see a lot of green throughout the healthcare sector with Merck, AbbVie, and Eli Lilly just leading the charge there. But as you could see, the financials, Bank of America's down 29%, JP Morgan's down 27%, Wells Fargo's down 16%. The financial sector has taken a beating. Technology, big cap and small cap, has taken just an absolute beating. That is what the first 6 months of the year looks like so far. It's not very pretty. We can't pretend that it is. It's just not very pretty. But on the bright side, that part of the year is over. And we could see here, this is energy way up here, and it has outperformed the rest of the sectors. But energy has been curling down, which makes me believe that the next CPI reading is going to show a contraction. And then the rest of the sectors, especially the financials, the technology, the real estate, they're starting to curl up, which leads me to feel like there's hope for the rest of the year. But then again, we don't want to get too excited because we are in a downtrend, and we just don't want to get too bullish at a time where the market can continue to go down if it chose to. Something I did want to show you guys, I speak mainly of the SPY, the S&P 500, because it is a broader indicator of what is happening with the rest of the market. And we are in July. July tends to be a more bullish part of the year. You can see here the S&P doesn't have too many bullish days, but when you compare that to the NASDAQ, in July the NASDAQ does have the first 2 weeks where it rallies. This is historical data, and the historical data does show us that with over 60% of the time, the first 2 weeks of July are bullish. Of course, because the S&P 500 has sectors other than technology, it doesn't look as good. But what will likely happen the rest of the year is when we are up, the NASDAQ will be up more. When we are down, the NASDAQ will be down more than the S&P. One thing I did want to show you is on smaller time frames when I'm day trading, you'll usually see me put these lines on my charts, and they create these little wedges. And this is for Friday, this is for Thursday, this is for Wednesday, and every time the price action reaches the tip of those wedges, it'll break one way or another. Sometimes it breaks down, sometimes it breaks up. Now these are symmetrical wedges where it's making a lower high and a higher low, and those don't give you a direction. Those will likely break to the trend of the market, the overall trend of the market. And if the market's trending down, they will likely break to the downside. If the market's trending up, they'll likely break to the upside. I did just finish saying that July is part of it's one of the best 2 weeks of the year. They're not as good as April, but we all know what happened in April. April, we had a losing week every single week. But the trend was down over the last few days, and you could see here when we broke to the downside. And then on Thursday, we broke to the downside. And then on Friday, we broke to the upside. So that tells you that that seasonality might come into play again this December. Another place that you could see that is on the daily chart. You could see that we have a wedge right here as well, a symmetrical wedge. Now, typically what will happen is when it breaks, if it breaks to the downside, it'll use that line as support as it goes down, or resistance as it goes down. If it breaks to the upside, it'll use this line as support as it goes up. And it'll continue to bounce off this line until it reaches its point, where in my opinion, the point that it's going to reach here is going to be that 50-day moving average right around that 400 mark. That's my absolutely maximum expectation for the S&P 500 right now, or the SPY at 400. If it reaches that by the middle of July, I would expect a sustained rally. If it does not reach 400 by the middle of July, then we will have a new low by the end of the summer. And when I say a new low, I mean a target of about 350 for the SPY. The reason the middle of July, the July 15th is the date that I'm giving, is the following week is the options expiration, and that week tends to be very, very weak. Now we have on the weekly chart, you could see we have 3 weeks in a row where we've made a higher low and a higher high, which is a good signal. Again, I would think that what's going to happen on the weekly is we'll keep making higher lows for 2 weeks and a higher low and a higher high, and hopefully that brings us to that 200-day moving average, or the 200-period moving average on the weekly. Currently it's sitting at 416, but it's likely going to gravitate to the downside around 400, which is where I'm expecting the battle to take place between the bulls and the bears again. One more place you could see that same wedge, you could see in the VIX, we're getting lower highs and higher lows. So you're getting that same type of symmetrical wedge, and when it reaches its crescendo, there's going to be a pop one way or another. That's just the way the market works. That's what it always does. It'll always try to reach that peak where it wants to pop one way or another. As far as price targets for the week, the higher risk range for the week is going to be around that 390 mark, and of course the lower risk range is the low of year 365. I do believe that because of seasonality, we're likely going to push the higher end of the risk range, at 390, 395. But as a trader, you need to be prepared for both sides. You need to be prepared for the upside or the downside. And as I was telling people on the chat, one way to play the downside is SQQQ. It's a triple leveraged ETF, but if you don't want to buy options and you still want to play the downside, you could play UVXY, which is the volatility, or SQQQ, which is shorting the NASDAQ. Those are the couple of ways you can take advantage of the downside. There's others, but I don't like going crazy playing the downside, because on bear markets, as you see here, up days will be very, very green. Down days will be very, very red. We're starting to normalize now, where the percentage gains and losses are smaller, and that sounds crazy for me saying that, because you could see here on these days we're doing 3% movements from top to bottom, which is a lot of movements. But I am still leery of the downside. One of the things I've been talking about is there hasn't been a catalyst to drive us much lower. But you have to remember that in 2000, the catalyst didn't come until the middle of the year. And if you look at the chart from 2000, it looks very similar to the chart of 2022. Now for the S&P 500, this is the worst start of the year since 1932. For the Dow Jones, this is the worst start of the year since 1970. Now you could take that one of two ways. Either we're going to bounce and have a really good second half of the year, or we're going to do what we did in 2008 and 2000, which is have the second half of the year worse than the first half and end up having some of the worst years in history. Let's hope that we bounce to the upside, because I know most of us have long-term positions and long-term portfolios, and we want those to recover. And it's very difficult to sit in front of the computer every day and watch your long-term positions just lose value. It's just not easy to look at. Still making money day trading. Day trading is the best way to make money right now. But I need to remind everybody to stay safe, stay cautious, keep everybody informed of what you guys are doing. Help each other out. If you see a good trade that you're making money with, share it with the group. Let's share some of those profits, and let's keep making everybody in this group better. Have a great day, guys. Enjoy your 4th of July, and I'll talk to you tomorrow.